Sean Taggy here, Chief Operating Officer and Partner, Memphis Investment Properties, and our golden boy.
Woo! Mark Hart as well. Welcome, everybody. So what are we going to talk about today, Sean?
Well, first off, we've missed everyone. We weren't around last week, but we're back at it this week. Today, we're going to be going over interest rates, appreciation, and our 2021 plans, and also our 2020 update. So yeah, let's dive on into those things. So first off, let's talk about interest rates. So the Fed met up. Jerome Powell and the chairman, they all met up on the Fed Reserve's policy meeting. So let's kind of read over that. And you can take it away from here, Mark, with this article.
All right. We're happy to share the article with you guys. But the most important part of this is where it says the chairman, Jerome Powell, refused to be boxed in during the Federal Reserve's last policy meeting of 2020. The statement had a similar tone to those over the past few months. The economy is improving, but the next few months will be challenging. The majority of the Fed officials see rates near zero, at least through 2023. Inflation remains well below target. So there's a lot of different things that are happening right now in that statement. One of the biggest ones that they're going to potentially hold rates near zero for the next 3 years, for the foreseeable future. Now, there's a lot of other things that actually go into where you'll actually have the 30-year fixed interest rates. That's why it's really good to look at the 10-year treasuries. But in terms of where we are right now, we are at historical low interest rates. Wow, I just saw someone get a 3.2% interest rate on a 30-year fixed loan, 20% down with zero buy downs. They didn't pay it down at all, which is just incredible, huh?
Yeah, that's pretty nuts how it's gone down that much. I mean, back in 17 and 18, when they were raising interest rates, people were getting in the 5.25s for investor conventional 30-year fixed loans. So pretty crazy where it's at now. That really helps with home prices. That helps with cash flow, everything like that. And obviously kind of need it. I agree with what they're doing, just keeping them low through these times right now. Yeah, that's good.
Yeah, and another big one that they talked about is inflation. Everyone talks about inflation going up. Is it going down? Well, according to the Fed today, it's well below the target, which is good news because real estate itself is a hedge against inflation because you can actually lock in a mortgage with a fixed interest rate over the next 30 years. So that's one of the reasons why a lot of people like putting their money into real estate as opposed to sitting in cash. Because in reality, the inflation rate is significantly higher than what most people actually think it is. So that's why it's good to put it into income producing properties, that also have the chance to appreciate as well, to hedge against that inflation.
Yes, we got a comment from a blast from the past.
Scott King, hey!
One of our previous property manager, kind of that ran a lot of our divisions here. Scott's off doing his own ventures now, but he was helping out managing the Reading Company, property management company for a long time, kind of Jim Reedy's right-hand man. So yeah, he's off buying and holding on to his own properties and all that. That's great. Good to hear from you, Scott. Thank you. Yeah. So yeah, Mark, I agree, man. I think that's really interesting. So in terms of that, what that does when interest rates are lower, kind of how I've been saying before, people can buy a house right now. Going on to houses, people will buy a house based off a third of their gross monthly income is kind of what type of mortgage they can pay. So now, though, if the mortgage interest rate is lower, that means the payment's lower. That means they can afford a larger mortgage amount, meaning appreciation. So for every 1% that it goes down on the 30-year fixed, it'll increase home prices about 12%. And that's kind of what we've seen. So let me give you guys a pulse report on November. So let me show this. This is actually a pulse report you can sign up for by Chandler Reports. And so they're talking about November. So Shelby County home sales activity was up 27% in November with 1,607 home sales recorded compared to 1,200 last year in November in 19. So I think that's going up because we had a big plug up from coronavirus through the summer months, And I think the fall and winter months have become the new summer months, at least for this year. So that's why we've had 27% more recorded sales. Then in terms of average home sale prices, they were up 12% from November 2020 to November 2019. So our average sale price 204. So we're breaking the 200K barrier. Woo woo! Finally here in Memphis.
Hey.
Yeah, that's awesome for Memphis. You know, we're still very affordable, as you can see, but we're getting up there. And just rolling off some other things, the median sales price was 160,000. That's up 19% from last year. I kind of, sometimes a lot of people, data and stats, they like looking at the median. That shows what's like right in the middle, not the average, because sometimes the outliers of the higher, very high priced home and the outliers of the low priced homes, they're worked into the average, where the median kind of shows where it's at right in the middle. So kind of interesting there. I think that's showing that the median is less than the average. That's showing that some really high priced outliers are up there. And then 36% of the homes were over 100,000, and over 300,000 were up 50% from last year. So 360 sales this year in the 300,000 for November versus 240 last year. And 12 home sales were at 1 million. And so, and then, yeah, that's what's showing the outliers, that last year there are only 6 sales at over 1 million. So just showing, I don't know, that just kind of shows me like the higher end, people are buying in the higher end, which are typically like sophisticated people, you would assume, $300,000, $1 million home buyers. Kind of shows me like their confidence in the market. Maybe they understand interest rates and all of that a little more, and understand the pros and of taking advantage of that. So those are kind of my thoughts there. What do you got on that, Mark?
Yeah, so now dive into it by zip code. That's where it gets really exciting. So now what we want to do is actually break it down. So where within Memphis is the appreciation happening? Where is it changing? Where is it increasing? And you know, this is something that we definitely factor in when we think where's a good place to invest in. And now this is just month by month. So you'll look in the column over on the left-hand side, that's November of 2019 compared to November of 2020, and then the percent difference of the change. One of the biggest variables to look at is that since this is only over 1 month's period, there sometimes is a skew in the number of sales for the data points. And because of that, it causes a big increase or decrease in the overall percent changes. So that's an interesting thing to take a look at, because this is kind of all over the board. But from a high level perspective, if you scroll all the way down to the bottom here, the overall percent change from November of 2019 to November of 2020 is 12.4% increase. So the houses have appreciated just over 12% in Memphis, Tennessee, of all places. The cash flow town is actually seeing some appreciation, which is phenomenal. And that would be your ROI if you paid all cash for the property. But if you only put 20% down, you're actually, and you're financing into the property, which the majority of our investors will do right now, that's actually going to increase that ROI quite drastically. So big you wouldn't even believe us if we actually calculated it out. So what are your thoughts on that, Sean?
Yeah, I love that so much. And that's why I think taking advantage of leverage, right? Would you rather have, you know, the telltale sign, would you rather have one property appreciating at 12% or 4 appreciating at 12%? Right? I'm pro leverage. I have other videos on that, but I mean, it just kind of shows right here. And, you know, kind of going off leverage, I would times it by like 4 would be typically your on paper ROI. You know, you don't realize it till you sell it, but times that by 4. So 48% ROI if you bought it November of 2019 in most of these zip codes. Diving into it, some of our rental zip codes here, I mean, you know, we could go into a lot of them, but a couple I noticed a lot was 38109 went up quite a bit, has a lot of data points as well, 22%. 38116, that is by Graceland, Elvis Presley. That one only went up 6%. Doesn't have a lot of sales going on in there. 38117, that's East Memphis, went up by 12.5. Another place I really like, of course, Bartlett, 38133. 7.5%, 5% and 10.7, and 38134 and 135. So I like those zip codes a lot. That's where I have a few of my buy and holds at. So yeah, just something for you to look over, to graze over.
But yeah, definitely all good news. And it's interesting to look at some of the outliers as well. Like we do some investing up in Millington, 38053, and that has appreciated at 43%, which is absolutely incredible. There's a Navy base up there on the north side of town. We get a few rentals up there, but it's a much smaller, tight-knit community. That's actually head of the HR department for the entire Navy is up there in Millington at 38053. And that was a 43% appreciation, which is just incredible.
Yeah, kind of crazy. And you kind of think that there's only, 36 sales versus 22 of last year. The square footage went up a bit. Kind of just makes me think maybe some new builds were built up there, something in that data skew. Anyways, you'd have to dive in. Okay, so now we have some exciting news for everyone. So first off, let's talk about 2020, how things went for us here at Memphis Investment Properties. So between all of our companies that our partners have owned and properties we've sold this year, we have sold 310 properties for the year. Woo!
As of today, woohoo, broke that big 300. 300 was one of the big goals to break. And so we had a big party last week when we broke that. It was really fun. All rang the bell. Took everyone out to have a nice lunch. So that was exciting. We actually gave everyone gift cards because we couldn't normally we get to go as a team. But it was definitely a big hurdle. It's been about 3 years that we've been trying to accomplish that 300 goal, and we finally did it.
Let me break that down for you. In 2017, we did about 235 turnkey properties, and retail flips to homeowners. 2018, we were at 245-ish. And then 2019, we were at 265-ish. So we definitely had a huge increase this year. We increased about 17% from 265 to 310 in terms of gross volume. So yeah, we've definitely pushed ourselves this year, and it was a rough year through COVID and everything like that, but we stuck it through and made it happen. So we're super excited about that. And it's also, setting the bar high for next year. We definitely want to hit 350, 365 next year.
Yes, the goal is to do a house a day, 365, including weekends. And we definitely think that we'll be able to accomplish that and provide more inventory for all of our awesome investors. So,
yes. Yeah. So in our thoughts, how we're going to be able to provide that, we are announcing very softly is that we're researching other markets to expand into. And we have some close by regional markets we're playing into and looking at. So anyone, any thoughts on that, places and markets you like where you want great turnkey properties or feel like there's a demand for them, but not a great product out there, and a company like us that could help out. We'd be interested in hearing your thoughts. We're not going to say the markets we're looking at yet, still dialing in, but it's definitely going to happen next year.
Yeah, definitely. And we will be going into other markets in multiple avenues, whether that's our apartment syndication model or our turnkey model. And we'll be branching out with both, which we're really excited about. So if there are any markets that you want us to go into, please just shoot us a message and let us know. We appreciate the feedback.
Yeah. Kind of giving you guys a reading company global type of thing. So our property management company, we manage right around, we're going to be hitting 3,000 doors very shortly. We're very close to that number. And in terms of multifamily apartment doors, of that 2,900, 2,800, I think we're around now, 900 of them are apartments. So we'll be hitting up the 1,000 apartment doors pretty soon as well. Most of those are owned by us. Actually, all of those are owned by the reading company family and me and Mark and us as other partners. So kind of in-house there. And so, yeah, just real exciting stuff. I think we're at almost 90 employees now, if you include all the companies and everything like that. So we're just growing and growing, getting bigger and bigger and better each year.
Amen. Love it. That is correct. And what's also great, even during COVID, we didn't have to lay anyone off. We were able to retain all of our employees. We were able to hire more people even through the pandemic, provide more people employment opportunities, which we think is just a great way to give back to the community.
Yeah, through those months, we actually hired like 2 people right before COVID, and it was a decision. We're like, let's wait a month And we waited a month when it happened, and the PPP loans came out, and we just thought, let's just keep doing it. And I think that's what actually blessed us with being able to do so many houses. If we let go of some of our staff quickly and made a rash decision, we wouldn't have had the infrastructure to continue through this really big bull run that we've had this year, 12% appreciation. So we're really glad we did that. We wanted to take care of our people. Obviously, we hunkered down and made it through those rough months. So it was good.
Definitely. So that was our update for this week.
Yes.
Let us know. Appreciate any feedback for any markets that you'd be interested in us to go into. And we'll definitely keep you guys updated as that progresses.
Catch you next time. See you guys. Thanks.
Happy